Good afternoon. Before we dive into a new week, let's hit rewind and recap the major financial news from around the globe that shaped the past week. Shares of C3AI surged 11.7% on Thursday, rebounding from a post-earnings drop without any direct news from the AI company. This upswing is linked to broader investor enthusiasm for growth stocks, spurred by the U.S. Federal Reserve's hints at potential interest rate cuts in 2024. The Federal Open Market Committee's recent decision to keep the benchmark interest rate steady at 5.25% to 5.5% for the third time in a row, and the prospect of rate reductions next year have bolstered growth stocks like C3AI. High interest rates typically discourage investments in growth companies by making raising capital harder. Despite its stock falling significantly from late 2020's post-IPO highs, C3AI has been focusing on profitability and cost efficiency, targeting positive cash flow by fiscal 2024's fourth quarter and an adjusted net profit by the second half of fiscal 2025. This strategy, coupled with the anticipated easing of interest rates, has reignited investor interest in C3AI's stock. Costco exceeded expectations in its fiscal 2024 Q1 results, with adjusted earnings of $3.58 per share, surpassing the anticipated $3.41, and revenue at $57.8 billion, up 6% year over year. Despite underperforming in U.S. same-store sales growth at 2.0% against the expected 2.77%, Canada and international stores outdid forecasts. CFO Richard Galanti emphasized post-pandemic momentum and a shift back to discretionary spending amidst challenging economic conditions. The company announced a significant special dividend of $1.15 per share, totaling $6.7 billion. Costco's shares rose 39% year-to-date, outshining the S&P 500's 23% gain. Notable sales achievements included over $100 million in gold bars and diverse e-commerce offerings, leading to a 10% year-over-year increase in app users to 30.5 million. Amidst these successes, Costco is preparing for a leadership change with CEO Craig Jelinek stepping down in January 2024, making way for COO and President Ron Vakris. In the first half of 2023, Meta and TikTok significantly increased restrictions on content in Malaysia, with Meta blocking about 3,100 Facebook and Instagram posts, and TikTok responding to 340 government requests to restrict 890 posts and accounts. This marks a notable increase in content regulation, with Meta's figures being the highest since 2017 and TikTok's triple the amount from the second half of 2022. The Malaysian government, under Prime Minister Anwar Ibrahim, denies accusations of stifling free speech, stating its focus is on provocative content concerning race, religion, and royalty. Communications Minister Fahmi Fadzil refuted allegations of personal involvement in content removal. The increase in restrictions has raised concerns among free speech advocates like Article 19, who warn against the potential suppression of legitimate free expression, particularly criticism of the government and public institutions. This escalation occurs amidst sensitive issues in Malaysia, such as race, religion, and the monarchy, and the government's previous threats of legal action against social media platforms for non-compliance. This is all we have for you this week. We are MEXEM TV, and we will be here next week, same place, same time. Goodbye.